Today I'm joined by Investor Mutual's Anton Tagliaferro, who is also Morningstar's Fund Manager of the Year in Large Australian Equities. Anton, thank you very much for your time today.
Pleasure.
Now, Anton, in your presentation, you talk about share markets being high around the world. As a value manager in Australian equities, where are you finding value in the Australian equities market?
Look, it's difficult. I mean, the Australian market is at a 6-year high. Many stocks have been re-rated substantially, so it's quite difficult. We're really looking for things that have been perhaps left behind in the run that we've had. So perhaps companies like Origin Energy, which I talk about in my presentation, companies like GWA, which are undergoing a restructuring, those sort of companies that still appear reasonable value to us, despite the market being at nearly record highs even in Australia.
Now, Anton, in your presentation, you also mentioned that you weren't hugely positive on the banks, but you do have some exposure to financials. So what sort of companies are you liking in that sector?
Look, we have holdings in things like CBA, Westpac, National Australia Bank. We're not adding to them at these particular levels. They don't look particularly enticing. So look, in the financial area, that's not an area at the moment where we're buying. It is an area which is very popular at the moment as investors, desperate for yield, are pushing those prices to quite high levels.
Now, Anton, there's been a lot of discussion that the growth in the Australian economy is slowing and many investors are looking to global equities. Are you seeing particular growth in the Australian market? Is that quite difficult being an Australian fund manager in that respect?
Yeah, look, well, obviously the Australian market's dominated by the banks, which, as I said, are not trading that particularly attractive, and also by the resource sector. And there's no doubt that prices of things like iron ore, copper, coal are going to stay subdued for many years to come. So again, companies like Rio, BHP, Fortescue are going to struggle, I think, to maintain the current level of earnings they have today and possibly even the current level of dividends. So, if you take out the banks and the resources, it leaves perhaps 30% of the Australian market in terms of market cap to look to find opportunities. So, it is a bit limited. But having said that, most overseas markets are also at record highs. So I'm not sure there's huge bargains in many offshore markets either at the moment.
Now, finally, Anton, 17 years in operation, and yet your fund hasn't experienced huge downside risks. What sort of processes have you used to maintain or smooth out that volatility?
Look, of course, when markets fall, our fund falls as well, but hopefully it'll hold up better than the market. And it's again, the reason is because we are focused on certain types of companies. We like companies with strong competitive advantage, with recurring predictable earnings, run by good, solid, capable management, and companies that can grow. And again, very much importantly, we focus on price. Every day we look at our portfolio and say, can we justify this price in the of this stock in the portfolio? So hopefully, when then you do get a change of direction in the share market, our fund should hold up better than most other funds out there, and also better than the index. That's what's happened in the past, and hopefully it'll happen again in the future.
Anton, thank you so much for your insights today.
Thanks a lot, Christina. Thank you.
Thank you, Christine, for Morningstar.